editor and top producer, and I have with me Jerry Gulke of the Gulke Group. He'll be talking going forward. Jerry?
Yes, today's report was supposed to have been a non-event, I guess, but what they did do is lower the carryout in this year's soybeans due to increased exports, thinking that China's going to, will sell more because of the China demand, and which is interesting because over the years, USDA and private analysts have consistently underestimated the Chinese appetite for beans, and there's some thought that maybe they'll got so many in stock now that they'll back off, but apparently USDA has saw fit to lower it more, and we're down to 210 million bushels, which is 40 or 50 million less than what we thought a few months ago, and so the market continues to tighten up that front end. And ironically, today's trade, the one that's down the most is the May soybeans, and that may have been because the market's been trying to buy the old, sell the new type thing, and we're seeing new crop beans unchanged down 3 and old crop dropping more. So I think the market's looking at this and saying it's just a matter of time before we lose our market to South America and Argentina when they produce this, start to sell this big crop that they have coming. I calculated it out, and it appears to be like about 1 billion bushels more beans than what they had last year. So the crop is kind of stabilizing around 66 million tons, which is a huge increase. So it remains to be seen if they orderly dispose of this, or they sit back and say prices aren't high enough or whatever. But so in the soybean situation, it looks tight up front, and everybody knows we'll have a carryover going into next year, and that increases stocks considerably. What I've done is looked at going forward in the corn, soybeans, and wheat, and not just looking at this year, but also another year out. In other words, whatever we produce next summer, what do we need as a carryover that would be comfortable that going into 2011-12, which is almost 2 years out, would create. And if you think back at 2006, we started that whole scenario looking ahead and saying, gosh, is demand going to be so high that we won't be able to produce enough to meet the demand? And that's how we got that bubble, so to speak, in prices. So if we're going back to that level, we need to now go back and look ahead again and see what kind of slow growth we might have. And we'll post these on the website and on the agweb.com, and you can take a look at them. But in corn, it looks like the carryover this year is going to be about 1.7 billion bushels. Going forward, if we increase our acres by 2.5 million and get a less of a crop by a few bushels than we got this year, like 162 versus 165, although we have capability of producing a huge crop if we ever get good weather, I think the odds of that happening with so much corn yet in the field and crop preparation further behind than last year, that we may see some late planted corn that we're going to have another perfect year to match last year's record yield. So at any rate, we could end up with using everything that we produce and maybe a little bit more to where the carryover isn't 2 billion, unless of course we get 168 bushel an acre crop. So a lot's going to depend on that yield in July and August that we see coming in from the weather. Going forward another year then, if we carry in about the same carryover next year into the 2011 crop, and increase acres by 1 million acres, then that says that our carryover stays about the same, relatively 1.5 billion bushels, maybe 1.7. But the bottom line is that we'll need to increase acres in order to meet the new increase in year after year of ethanol, which the government continues to increase. This month they increased it again, and likely is going to increase 200 to 300 to 400 million over the next 2 years, especially since President Obama's new initiative out there to suggest there's a problem with getting ethanol where it is to where it isn't, and he says we need to do something to transport this stuff to the west and east coast. So we don't have a president that's negative ethanol. In fact, he's positive biodiesel, and they want to expand that in the United States as well as worldwide. Asia, South America is doing it, Europe's doing it. So it's a situation where we could find ourselves using a lot more soybeans in the United States for the crush. In other words, we're going to burn some of the edible oils, and all this leads us to believe, me to believe, that the government has come to realization that biotechnology seeds are helping us solve the problem of getting supply in balance with demand, maybe a little more supply this coming year than we anticipate the demand to be. And with the world recovering and economically, if we can get that on tap, it's kind of like the government came out a couple weeks ago and said, you know, you produce it, we'll get rid of it. And if we can't sell it, we're going to make ethanol out of it and biodiesel. And it's good news for the farmer and helps us look ahead a number of years. It says that we probably know what worst case is, and that's what we've seen in the past year where we had an economic problem. And what were those lows? They were like $8 in soybeans and about $3 to $3.20 in corn. Below that, we probably pour the coals to usage because we have too much and lower prices just buys more demand. So today's report was kind of a non-event, and we'll see how the market looks at it. But looking forward, it looks good for far out months and years. It looks better. Wheat has a problem in that it is oversupplied, but as I understand it, next year the people that missed out on planting winter wheat will want to plant those acres next fall because they'll go to beans this spring, and still they like the winter wheat followed by double crop beans. So we should see wheat acres back up again next year, and that will mean more double crop beans but less full season beans. So it's a mixed bag today, but a supportive corn and probably beans, but more importantly, we'll see how the market closes. And oftentimes we determine how the market reacts to the report, not necessarily what the report says. So certainly you do not want to see corn closing 5 or 6 lower today and beans 15 to 20 and that type of thing. And you're certainly going to see a wild day. You're going to see it open higher today, which you did, and then wild swings as traders reposition themselves and take a look at going forward. It's hard to justify